Welcome to episode 17 of Kontrarian Korner. I'm Ben Kelleran. Today we have the pleasure of having Rudy Havenstein on. He's one of my favorite Twitter accounts to follow. He's always got something entertaining to say or post or meme about on Twitter. So if you need some entertainment, go follow him on Twitter. But thanks for coming on, Rudy.
Oh, my pleasure. Thanks for inviting me.
So I've been enjoying that you have been on the podcast circuit over the last 6 months to a year. But one of the things I wanted to kind of ask you about is your investing approach, because we all kind of see the uncertain investing environment, some of the stuff going on with the Fed and the debt and all these different things that, like you kind of talk about the Cantillon effect and all those things. But I wanted to kind of pick apart what you look for in investments and trades and kind of see where that takes us.
Well, first off, none of this is investment advice. I have a very boring, I don't trade much. My attitude has always been, I used to joke, turn on the news or open the stock market up and what's the most hated thing right now? I'm not a momentum investor. And I know that there's plenty of people that have made billions, buying high and selling higher. I'm just kind of the opposite. And I'm not really a cigar butt investor, but I'm looking for things that I think are not going out of business, where I don't think management will intentionally screw me, that the stocks are hammered for some reason. And I'm patient too. I don't mind sitting on a loss for a period of time if I think my long-term thesis is correct. And I hold things for months or years. And so I probably break most of the trading rules, that the day-to-day guys would do. But so that's basically it. I have very undiversified. Right now I have a lot of energy, stocks, some of which have done extremely well, despite energy not being the most favored thing right now. But and a couple that are dogs, but I still like them. And then I have, a variety of holdings that I've had, for 30 years. And periodically, 2001 or 2008 or 2020, I'll see that they're down 50% and I'll buy more. And I'm pretty patient like that. So I'm long only. I don't use margin. I haven't shorted anything since 2009. Downey Savings and IndyMac. Those are my, and of course I covered too soon. And because I just saw, you are fighting the Fed. I mean, the whole government and Fed's, policies since Greenspan have just been to, spike asset prices no matter what the societal consequences are. So that's my investing style. I don't want to go into specific companies, but one thing I always said is I think most companies, their top executives are there to enrich themselves. I think there's very few really good managers, and long-term, maybe for a short pop, sure, or a few years, but long-term. And that's what I'm interested in, is more long-term. So I'm a long-term, boring, vanilla investor. And so it always amuses me when there's some craze with NFTs or with, zero date options and all that. And a lot of the guys that follow me and I follow them, they're like, they know this stuff inside and out, but I just find it all kind of amusing, because really you're probably at better odds just going to the roulette table and putting it all on red, I think, and it's better regulated too.
Yeah. So I'm sure, I think it'd be more entertaining as well to spend, go float in Vegas over spending it on some picture of a monkey or whatever.
Oh, I thought that was such a joke, and I still do. And of course, but then again, I'm not the target demographic for things like that. So,
yeah,
and some people made a ton of money. You can make a lot of money in frauds and scams. I mean, if you get out in time, people make fortunes in scams all the time. So, just because something's a scam doesn't mean you can't make money in it. But I just avoid that kind of stuff. I'm never in like the popular stocks, except maybe indirectly. And I don't mind. One thing, I have no FOMO. So if you tell me you bought the stock and it went up 10 times, I'm like, good for you. It doesn't bother me at all that I didn't buy it. And I've always managed, even since I was younger than you, I always managed my own money. I never never had an advisor or anything like that. I mean, very early on, I might have had a buddy that was a stockbroker, back in college. And of course, back then they'd push whatever inventory the brokers wanted to sell. But so you learn your lessons when you're young too. So it's good to lose a little money when you're young trading, and you figure, so you don't do it when you're like 40 with a family and kids and all that. So
yeah, got to pay your tuition.
yeah.
But I guess before we move on to kind of the real estate side of things, I wanted to ask if there's any sectors or any things that appeal to you right now. I think there are certain spots in energy and other places that look really appealing to me. I'd be curious to hear if you have some places that are starting to pop up as interesting value opportunities.
Not for me right now. I'm as fully invested as I've ever been. I mean, and I have been for this for last year or two, which is kind of scary to me. But I'm doing well, even though I don't own Nvidia and things like that. And I know at some point some of these stocks I own will go down 50%, and because they've done it before while I owned them over the last 30 years, and that's okay because they're on sale. Anything else goes on sale, people get excited, but stocks go on sale and they like run away, which I always found amusing. And your main risk, I don't see volatility as risk. I see risk as permanent loss of capital. So that's my main concern. Is this company that I have faith in going to go bankrupt because of whatever, bad management or something, which is generally the reason. But yeah, no, I don't. I mean, energy, but like I said, I'm pretty fully invested right now. So I'm not, I wish I had a lot more cash or liquid cash, and I guess I could sell some things to buy something else. But no, I don't. I'm not high on anything right now. I'm just sitting back mostly and watching.
Interesting. Yeah, I mean, most of my focus has been energy and certain commodities, but I think that's at least personally where I think the value is. But
I have a significant percentage of the portfolio is commodities and energy.
Yeah, I think that's kind of a better place to hide out, I think, for whatever may come over the next couple of years than trying to buy high and sell higher, like you said. But to move
it
on,
works for some people if you have that personality, but I just have more like everyone hates this. Like, well, let me take a look at it kind of personality. So
yeah,
and vice versa. Everybody loves it. There's a guy I was listening to yesterday. He's a great trader, Jason Shapiro, and total opposite of me. I mean, I don't trade at all, but like that. But he says, you don't short price, you short participation. So that's another. I wait and see for extreme. I'm looking for extremes, and sometimes I can catch them. It's a lot easier, I think, to catch extremes on the bottom than on the top, because tops tend to just keep going. It's really hard to pick a top.
Yeah.
And so, I generally always, the stuff I do trade, I always sell too early and usually buy too early. But, you can't go broke making a profit.
Yeah. That's one of the things I was talking about the other day with Paulo Macro on
he's great.
Like positioning, sentiment, and narrative, and how that kind of impacts his process. And like there's certain companies I own that I think are worth way more than they're trading at, but then you realize that you have to have like the narrative change and all those things start to happen to have the stock really work. So that's definitely something I'll kind of be paying more attention to moving forward. But as far as real estate, I think you've kind of talked about it a little bit. I've seen some other Twitter accounts that are posting anywhere from doom and gloom to real estate, and others say that nope, we're gonna keep going higher for a variety of reasons. So I'd be curious to hear your thoughts on real estate and if I'll be getting a buying opportunity for a house here in the next couple of years.
I hope you do. I hope all the young people get an opportunity. I'm not convinced they will, but just to keep in mind is keep your hopes up. I mean, I think, now just using Case Shiller, which is flawed, but I think that peaked in 06 and it bottomed in 2012. And then even in California, people think California, back in the 90s, 90 to 96, it peaked in 96. And then I think statewide, it went down like 20% in those 6 years. So the point is that real estate is a battleship turning, in other words, and we're still hitting new highs in median and home prices, in at least nationally. But I did see today that home sales, I think it was, are like lower than they were during COVID. So there's definitely a stagnant market now. What I would point out, and this totally relates to the problem with young people today that they have financially, is that when I grew up, a house was like three. I mean, well, I guess it would be like two, 3 times two incomes maybe back when I was probably your age.
Well, I think
And
it was 2 to 3 times. Yeah. And somewhere in
yeah,
there, depending on where you were.
two incomes because I'm in a high cost area. Maybe other places it was one time. I know if you go back to the 60s, it was 3 times one income. And this is in a high cost of living area. But and of course it got much higher cost. But it never, no one I knew in my era ever thought, oh, maybe I'll never own a house. And now I hear people talking about their kids and stuff that they're discouraged. They're like, I'm never going to own a house. And I think that's terrible for society. I mean, where I am now, even if you take the median, you have two good incomes, a starter house might be 6 or 7 times two really good incomes, so or 10 or 15 times an average income. It's gotten so much more expensive. And I tend to think that here's something that's different in the last 15 years is there's a lot of new competition for houses, for single family houses in particular. I'll talk about, because these companies like Americans Home for Rent and Starwood and Blackstone that own hundreds of thousands of homes across the United States, they did not do there was none of that before 2010 or so. So growing up, you were competing with another family that wanted to buy the house. I don't remember having competition from investors even back then.
Well, even if he did, it was probably just like mom and pop type deal where it's like they own 3 or 4.
Exactly. And so there was no, when I was your age, there was no investor thing. I mean, yeah, they existed. Mostly they did like where I grew up, they'd be buying triplexes or 4 units or something like that, or duplexes. There wasn't a lot of investors that I remember going around buying single family houses as rentals. But the point is you've got I don't know how many, I don't know what the total count. There's at least 30 or probably now it's more. I mean, there's an article in 2020 I posted that said there was 25 to 30 of these companies, like the Blackstone, American Home for Rent types. And
it's actually a terrible business when you think about it.
Well, which gives us hope. Maybe it'll end up, these guys look at these numbers as an investment. Maybe they'll start dumping some of these. But the problem is a lot of times a company will buy, 2,000 houses in Phoenix. And then when they sell, they'll sell 2,000 to another private equity fund.
They'll just like roll it up.
Yeah. Yeah. So they buy these houses one at a time and then they sell them in bulk to another, billionaire guy. And that's terrible because these are all houses that would be available for, families to live in, and assumably at much lower prices. You also have the Airbnb thing, which I think is a couple million roughly, maybe it's less than that, but it's a huge, and the investors. And this is what happened when we went to ZIRP. And remember, we went to ZIRP in 2008, 0% interest rates. Now, prior to that, you could get always like now 5, 6. I remember you could get a 2-year note for 7% back in the early 90s. And so people didn't need, your average ma and pa. They were like, they didn't want the hassle of buying and renting a house out when they could make 7%. So when they took everybody from 5 or 6% down to ZIRP in 2008 and left it there for basically 15 years, everybody and their mother with excess money got into real estate. That anyone in the top 10%, 20% of the population. I mean, I saw it. Everybody, because, well, I'm getting 0% of my money. And that was actually their stated purpose. They wanted the people to go out and do that. Well, the problem is what it did was it's just created this massive inflation in asset prices, and which is great if you're someone that owns these assets, especially if you're someone like Barry Sternlicht or Bill Ackman, but it screws the vast majority of the country that doesn't own these assets. I mean, people say, well, people own their homes. Yeah, even the people that own their homes, you think, every time their house goes up nominally on paper, their property taxes go up. And of course, a new roof is double what it used to be and all the other inflation that was caused. So I think it's been a huge, when you take the public companies, the Blackstones, and you add in the Airbnbs and you add in the desperate for yield buyers over the last 15 years, that's a huge extra demand for houses. I think that young people have to compete with. And, there's a great guy on Twitter called Nick Halaris, Halaris, and he was in like the Ma and Pa type, or maybe he was a little bigger back in the after the Great Depression 2, or GFC, as most people call it. But he was buying up houses, and he has anecdotes about, he was at one auction where Blackstone came in and paid 50% more than any of the other guys there would pay, because even when people had rates of 3 or 4% mortgage rates, Blackstone's getting 0.75% from the Fed, or from wherever else. This is who got saved in 2008 and in 2020 with this incredibly reckless and irresponsible monetary policy. They basically chose to reward the top 10% of the people. Particularly, there's 10% owns 93% of the stocks. They own a huge amount of the real estate, and it's called, look up the I know you know it, but people should look up the Cantillon, Cantillon effect. It's been talked about for hundreds of years. It's basically when you have zero cost money, the people who have the assets to have as collateral to borrow against it are people who are already well off. So literally the rich get richer and the poor get poorer. And I've benefited from that. My asset prices have gone up because of this irresponsible, reckless Fed policy. And but half America doesn't own stocks. And like I said, 10% own over 90% of the stocks. So the people in the next 40, they own some stocks, but it's certainly not, anything huge. And as I pointed out before, if you make if you have a 7 or 8 figure net worth and make $500,000 a year, you're still closer to the homeless guy than you are to Jamie Dimon or Lloyd Blankfein, and keep that in mind. But anyway, I think that we're paying the consequences of horrific monetary policy, which lasted way too long. And unfortunately, it's hurting people like you, the young people who aren't forming families. They're living at home. And you saw the, what do you call it? The birth rate is at the lowest ever in the United States. And some people love that, but I don't think it's a good thing for society. And I think that, the Fed is always about short-term gains, and they don't care about the long-term consequences. Well, the long-term consequences is the destruction of the middle class in the United States. And as I put it, they did that in order to prevent some billionaires from becoming mega millionaires. So, and see, you got me started here, but I am hopeful that Blackstone may have lower returns on these houses they bought and maybe decide to sell them. But I'm discouraged because I think they'll probably just sell them to some other billionaire private equity fund. As for the Airbnbs, maybe those start trickling on the market. And, maybe the Ma and Pa's go from, like they did back in 08, 09. There was a lot of people that had 8, 9 houses, and they went and they lost them all. They sold them all. But then you had Geithner in the Obama administration that came in, and instead of, selling those on the cheap to just, responsible people who had cash, young people to buy a house, they bulked them up in 200 or 300 at a time and gave them to, Geithner gave them to Blackstone or whoever else was around that had, billions of dollars. And now Geithner, guess what? He's CEO of Warburg Pincus, which is a private equity firm. Okay. So the corruption, anyway, it just angers me what's been done to the young people in this country. And sorry, my rant, but it's not right. And I hope things do change for you. And they may, but I think it's going to be a 5 or 6 year process from top to bottom if houses are going to correct, which I sure hope they do.
Yeah, I think it's interesting to look at because some of the stuff you're saying there, I think there's certain things that are going to happen that make this unavoidable, but the timing of it is what makes it difficult. Like, yeah. I think it's some of the stats I've seen are it's basically like the worst time to buy a home right now if you didn't already have one. So, like you said, it screws the young buyers there.
Mortgage rates are historically normal right now. They're actually a little below average if you go back like 60 years, which is what the Fred data is. It's the prices.
It's the price.
Yes. Yeah. The price has to come down. Houses are too expensive. Now, people can say, well, we can't build them for that. Well, I don't know what the answer is, but the price is the problem. And the reason that, Jim Grant has a great quote that it was the 0% era that made 5% rates dangerous. Of course, what are they doing now? They're planning to cut. Sure. Yeah.
It's but like some of the things you see where I think it's something like 10 million houses are going to be sold or passed down by the boomer generation over the next 10 to 15 years. And so I think like you look at some of these things with supply, I think it's if we can get the immigration situation under control, it'll be interesting to see how that plays out. But I guess when you have places like California doing their was it 150,000 0% loans or some ridiculous policy like that, like I mean,
it's insane.
Some of these people are
insane.
just they're vandals, and I think it's arguably treason in some of these.
Well, every
some of these
single
cases,
thing the government and the Fed does until this last bizarre period of slightly higher rates in the last couple of years is to get asset prices higher, and there's no incentive for anybody other than people that don't own houses for house prices to come down. Now, here's the thing: you talked about 10 million houses are going to go from parents to children. Well, I know cases where the parent dies, the children get the house, no one can afford it, or no one can afford the property taxes, and no one can afford. They can't afford to buy out. One guy buys out the siblings or something.
The siblings, yeah.
Yeah, it's just. I mean, I'm sure it happens, and it does happen, but it's just as often that house ends up getting sold. So, and then even if you have a house, and let's say you're in Austin or something, and you have this $100,000 house that's now $300,000, $400,000 because all the Californians moved in. Although Austin is definitely softening now, but your property tax went way up, and like I said, your homeowners insurance went way up, and if and any maintenance is probably doubled. So. Are you better off? That's what I'm saying. It's like if you're going to stay somewhere a while, like I'm not going anywhere. Then I don't care. I never add in the Z estimate or subtract it out. I don't care whether my house is worth more or less than what I paid for it, because it's a place to live. It's not an investment. And that used to be, I mean, it's this century, it's suddenly become an investment because we financialized everything in this country. I mean, everything. We're talking about private equity buying up kids' sports leagues and stuff. And they bought my optometrist. He was a great guy. He worked for them for a year. Now he's gone, and it's like I'm a sheep to them now. I like the guy, and now I've got some generic private equity optometrists there. And of course they nickel and dime. They want to squeeze all costs out, and they, squeeze every dime out of you. And it's just, this is happening all over the country, and it's not good. We've gone so far astray as far as the financial system. People say, "Oh, there's problems with capitalism." I go, I don't see much capitalism. I see socialism or fascism for the Larry Finks of the world, and then I see Darwinian capitalism for most other people. Especially the middle class, who don't have the safety net that the poor do in a lot of cases. So,
yeah, it's definitely interesting because you see some of the stuff with private equity kind of hollowing out the middle class in a lot of ways, where like the recipe is cut costs and go in, run the playbook, lever it up, dividend out, or sell it, or whatever the exit strategy is. But you kind of see it across healthcare and all these different industries where the actual good or service that some of these industries provide, when private equity kind of gets in there, like the quality is significantly worse. And then by the time the problem becomes so obvious, like they're already a couple years gone, if not longer. So
guess where Jerome Powell came from? Private equity. I have there's a great article by a guy named Chris Leonard who wrote a book on the Lords of Easy Money, which I recommend. And there's a whole great article on Powell's private equity career, and it's pretty brutal. So I'll send that to you, and maybe you can attach it to this podcast.
Yeah,
or something.
I'll put a link in the comments or
sure.
In there. But before we kind of get into some of the generational gap and some of the wealth gap stuff we've kind of hinted on already, I want to kind of ask a broad question on inflation, because I know there's a lot of people are talking about, oh, there's a recession coming, we're going to have to drop rates massively, and all these different takes. Obviously, the CPI is not accurate, but I kind of think if you look at actual inflation, like what would the inflation be if you measured it accurately and actually included asset prices in as like a percentage of the basket? Because when what's his name, Paul Krugman says Oh, see, inflation hasn't risen if you take out the cost of everything you actually have to buy, like food, energy, and shelter. Like when you see charts like that, just like how'd this guy ever win a Nobel Prize? But
Krugman is the epitome of just what's wrong with academia in this country. He's so clueless. He seems to revel in it. This is a guy who was making, by his own admission, $50,000 a speech 25 years ago. Okay, so for him to basically mock and downplay everyday people's struggles with the cost of living, it's like, oh, there's everything. I mean, it's beyond insulting. I don't know how that guy goes through life without getting punched in the nose every day. But I guess he doesn't hang around with normal people. He's hanging around with people like Greg Ip or Jonathan Chait or whoever, who say the same thing. Greg Ip, I think he's from the Wall Street Journal, had a headline that says, the data's not wrong, you are. And Chait had a thing said, Krugman's right and you're wrong on the economy. What is it?
Don't believe your lying eyes.
Oh, exactly. And the BLS does that. And it's very common in the media too. I mean, look at some of the headlines, and I usually share them. It's insulting. It's insulting. I always say, let's go have this debate in a supermarket aisle. Nobody, I mean, if you want to have, these guys, they're in this rarefied bubble. Do you think Paul Krugman ever sees anybody who struggles to buy food? No. And yet he'll mock someone complaining about high prices. He'll mock it. And this guy's loaded. And you got Barry Sternlicht saying, I don't know why our inflation target couldn't be 4%. That would be fine with me. Well, yeah, you're worth $4.5 billion, Barry.
And you're levered long as basically as high as you can crank it with real estate. It's like,
those are the people who want inflation. The people who are levered to the gills and they own a ton of assets. They want inflation. But you talk to normal people, like 90% of the population, and they hate inflation. They hate it. And Powell even admitted it. And I'm like, he actually got on, if you remember a few months ago, and says, people hate inflation. They hate it. And I'm looking at him going, dude, in 2020, you guys specifically changed your policy to seek higher inflation. You want high inflation. And they don't see the disconnect there, but they're surrounded by people who are not in the real world. I mean, the Fed has like thousands of vice presidents and stuff who all make $250,000 a year, a couple $100,000 a year. It's insane. These people live in this rarefied bubble, and of course that includes most of the CNBC guests and everybody at Bloomberg and FT. I don't know what world these guys are in, but I don't see anybody. I make jokes about this all the time. Nobody is going and talking to an average person on the street about inflation. They're asking Bill Ackman or Barry Sternlicht, and it's just
an academic exercise for people like at that sort of net worth, right? They don't.
Right.
They're not gonna care if the cost of steak went from 15 a pound to 20 a pound or however much is increased, right?
100%.
It is what it is. They don't even check the price when they pay it. And there's I mean, I don't think things are gonna get any cheaper as far as all that stuff, but I think the only approach to it really is kind of, if you figure out the joke, then you kind of have to figure out what your approach to it is going to be. And I think with all the zero interest rate policy, all the ZERP distortions, I think commodities is going to be a pretty good place to hide out. But
sure,
some of the stocks there. But if you want to get into some of the generational gap stuff and generational divide, wealth gap, all that, I think that'd be an interesting topic because that's been something that's been rattling around my brain for a while. And I'm trying to kind of put together some of the pieces on some of the birth rate stuff and culture dynamics, like being able to buy a first home. Because one of the things I think really, if you look at like our culture right now and some of the degeneracy and just kind of the kind of state religion of like all the stuff you see as far as, I mean, it's basically straight out of the Olympics, but the thing with birth rates I think is interesting is like, if you change the culture and change what is high status and what people desire, like I think you'd see birth rates basically fix themselves like fairly quickly, like within 5 years. But the culture change thing, that's I don't think the people in power want that. So I'd be curious to hear your thoughts on that.
Well, we worship wealth and billionaires, and at least the financial media does, and the mainstream media too. I mean, they're P. Diddy was a big star until we found out what was, a real.
Found out he was Black Epstein, basically.
Well, I mean, you could go back 30 years on him. I mean, it's not a new story to people that pay attention. But yeah, that kind of thing. We worship. Adam Smith's got a great thing about that I'll post to about how we worship. We worship wealth as if equating it with virtue, and we condemn the poor as if that's equivalent with sloth or with something bad. He said, and it's Adam Smith, right? And a couple hundred years ago, and I think that's our culture now. It's so materialistic, and like I said, I don't have FOMO, so you got the latest phone, good for you. And I've tried to inculcate that in the family and everything. Nobody has to have the latest Nikes, and nobody has to have the latest phone. And everybody's perfectly happy. It's hard to raise a family when houses cost 15 times your income and you're living in your parents at 30 or 35, so it's hard. And I hate that. I'd rather have a hell of a lot. I'd rather have no home equity and have kids be able to buy a starter house nearby, it's a problem. And then the kids rage against the boomers, and I'm on the very tail end of that. But it's, again, I don't like these generalizations because it's not all of any group. I don't like the whole generational thing. I think
I guess if I could clarify too, like, if people can't take I think stereotypes exist for a reason, but like if I had to explain to people the not all boomers or not all this group, not all like that group, like if I have to explain that to people, then it's just kind of a sign of, I think, a low IQ basically. But I mean, it's obvious that it's not everybody, but the generalizations exist for a reason. So
right. No, I agree with that. I'm just saying that I think your average boomer is a beneficiary of horrific monetary policy, and your average person younger is on the wrong end of that deal. Like, for example, back in 2020 in like February, before everything really hit the fan, the market had started to correct. And by the way, we were going into a recession before COVID. People forget this. And people also forget that QE started in September 2019 for no reason other than they had to bail out the hedge funds, the Fed. So it was already coming until they poured trillions and trillions of dollars into every billionaire's pocket. But what happened? The market was down in February 2020, and it was down like 14%. And somebody like Steve Leisman, who's one of the worst propagandists for the Fed in history, he's really right up there. He said, the Fed needs to step in right now and do something. Okay, we're down 14%. Okay, off of all-time highs at that time.
Just like Siegel recently with we need an emergency 75 basis rate cut.
You mean the guy that works for Wisdom Tree?
What a clown.
Yeah, that guy. I agree. But I replied and I said, hey, to Leisman, I said, hey, so stocks are 14% cheaper than they were, a month ago. Isn't that good for young people who are starting out wanting to buy stocks in their 401ks or something? And that's the way I look at it. Everybody says, you can't have stocks go down because it's bad for this guy, but it's also good for this guy. See, so what we do in this country is we pick winners and losers. And we overwhelmingly always pick the Barry Sternlichs and the Larry Finks and the Steve Schwartzmans, because those guys are the guys that, frankly, FOMC officials are going to go work for when they're done. I mean, look at Bernanke at Citadel. I mean, that to me, I still can't believe anybody, thinks that's okay. And also PIMCO. They all go to PIMCO. And they remember Janet Yellen. This was not publicized anywhere. This was not in any news story that I found anywhere. I actually found it from a Magellan company press release. She was working for Magellan as an advisor when she was testifying. This is when she was out of office for the first time in like decades. And her and Bernanke in 2020 testified before Congress that we needed to buy, corporate bonds and stuff. Well, Bernanke, they said, 2 ex-Fed chairs. Well, no, you had a Citadel guy who also worked at PIMCO, and you had a Magellan Financial lady telling us
no conflict of interest.
There's I can't believe, of course, when you've got Congress insider trading left and right, I guess they don't care about corruption, obviously. But it's corruption. I mean, look at I joke, Occupy Wall Street is basically about ex and future FOMC officials. I mean, they all either come from, or go to, look at what's his name? Kaplan was on the other day. He had to leave in a scandal from the Fed because he was insider trading over $1 million every trade, during COVID. And now he's back at Goldman Sachs. And guess where he came from? Goldman Sachs. Kashkari, as his reward after he gave $700 billion to Hank Paulson's friends in 2008, he ends up at PIMCO with a sweetheart deal that gave him the money to then run for governor of California and then somehow inexplicably get appointed as Minneapolis Fed chair president. How the hell does that work other than maybe a phone call from Hank Paulson, right? And nobody questions this. It's beyond belief to me that there's very few other than, the people that are, that follow me or I follow them that notice this, but certainly nobody in the mainstream media ever questions this. And these are just glaring conflicts and corruption that nobody cares about. And then you wonder why the rich get richer and the middle class gets destroyed, So
well, I think it's frustrating too, because of how blatant it is, how out in the open it is, especially over the last 5-10 years, where it's just so obvious to anyone paying attention that you see stuff like the Nancy Pelosi ETF or I mean, go down. I mean, it's almost a joke at this point. But
look at Yellen, who's been at the Fed off and on since 1977. So she's been part of this entire destruction of the middle class. So she left the Fed, and in the next 2 years, now the Fed is the number one regulator of the big banks, right? And they don't do it. Yeah, but they in theory they are. And so she leaves that position, and in the next 2 years, during COVID, I think on mostly Zoom calls, she makes $7.2 million giving quote speeches to the same banks that a year or two before she was supposed to be the head regulator of. That is a bribe. It's a payoff. I know the Supreme Court probably just legalized it, but it's so galling, and everybody worships her like she's the second coming. I mean, I still can't get over that she's Treasury Secretary. She's like, I don't know, Forrest Gump or something. She just keeps, she's always around when bad things happen, but somehow she always, gets promoted. And now Bernanke's probably just happy to be collecting his $20 million a year or whatever at Citadel. I don't know. I just wish these guys would go away. They never go away. They always need more money. It's avarice and irresponsibility, and there's no accountability ever for any of these guys.
Yeah, I think. I could go on and on about how frustrating it is to see what happens with all these things. But I guess the question I have for you is this something that is fixable, whether it's 10 or 20 years out? Does it take a generational change as far as who's in positions of power? Does it take a culture change? Does it take kind of all the above? What is your position on if this is something we can work our way out of?
Well, I think right now the Fed is Congress's drug dealer. So they're not going to do anything about it. They could. The Fed is a creation of Congress. It's not the fourth branch of government. People forget that. And I think most congressmen have no clue about the Fed, about their responsibilities towards monetary policy that were in the Constitution. So I don't see anything happen unless we have a younger generation comes in. And of course, that younger generation has to understand how the Fed's policies create this division in America. I think the wealth inequality that has been growing and the destruction of the middle class is absolutely related to the division and angst we have in the country today. And so hopefully you got to get people in there who understand the damage that these policies of easy money have done. It's been great for the billionaires and not so great for everybody else. And inflation is a huge factor that I think is grotesquely downplayed by the top pundits because they're all benefiting from it. But Louis Gave, a French guy, has a great quote. He says, I grew up in France and I had a lot of Karl Marx in my education. And one thing Marx teaches you is that revolutions are usually because of inflations. So they're playing with fire here. They're really screwing people in it. And you can tell them in the headlines all you want that, hey, you guys, everything's great. What's your problem?
Yeah, inflation's coming down.
Yeah, but the man on the street, well, people have to live on price levels, not rate of change.
No, I know.
So, yeah, no, I know you do. I'm not, I'm just speaking to the airwaves here, preaching to the, maybe some are converted, but a lot need to be converted.
Shouting into the void a little bit.
Yeah, a little bit. I used to put up Don Quixote images on my feed, but I got to tell you, it is encouraging. In the 11 years, there's a lot more people, I think, that understand the scam now than 10 years ago. And that's good. And a lot of young people, and I think, frankly, the Bitcoin people, I think they get it. They get the scam.
Yeah. They get the joke.
They get the joke. And but those people have to vote, and they have to vote for people that understand the problem. Is it fixable? Okay. So I always like to joke, end the Fed, right? Well, I'm not delusional. I don't think it's going to end in my lifetime, but they could put a massive leash on it. The QE has to stop. That's just all. I mean, Druckenmiller even says that's the greatest accelerant of wealth inequality was the easy money and the QE. They got to throw out the ZIRP, throw out the QE, and just don't do that. The Fed should, handle the payment system, and if there's a cyber attack on America and they need to front some money to these banks, fine. But they should get out of policy. They shouldn't be doing climate change. They shouldn't be bailing out hedge funds like they did pre-COVID in 2019. That's also in Chris Leonard's book, $400 billion just to save some hedge funds that made some bad bets. They got to stop doing that. You got to put the Fed on a leash, and you have to hold them accountable. Every time a Fed chair goes before Congress, most of the time it's just like, oh, thank you for being here, Chair Powell. We really appreciate you. They don't realize...
like the bow down type deal.
They don't realize Powell works for them. And more importantly, Powell should work for the American people, and he doesn't. He works for the big banks and the people that own the big banks. And that's always been the case. I mean, that's why the Fed was founded. People, it was founded to do this or that. No, it was founded to stifle competition to the New York money center banks. And it was also done to socialize losses and privatize profits, which, I think in a one sentence, that's America this century. Privatize losses and privatize profits and socialize losses. So yeah, it can fix, but we need radical change in our leadership. And I don't see it coming. Maybe after this next election, the next group of people we get in, because if you remember Donald Trump, he wanted negative rates and he wanted more QE. So
more cowbell.
More cowbell. So that's in that sense, that's not encouraging either. So. And unfortunately, the Canyon effect will just keep going on steroids if they keep doing this kind of stuff.
Yeah. No, I think it's interesting to watch. I don't know if there's when these changes are going to take place, but I think there is going to be a generational shift in politics. And I would hope that has some carryover effect to the financial system and some of this bad policy we've seen. But before we wrap up, I wanted to kind of do a little bit of a detour into some of the geopolitical stuff as far as current events, if you don't mind going there, because sure. I think it's an interesting topic when you see some of the stuff going on in the Middle East, some stuff going on in Ukraine, and like the same incompetent people that are in political power and kind of have influence here in the US are making some decisions overseas that just look asinine, in my opinion. And you see whether it's in Israel, some of the stuff we're funding, or like the temporary dock that floats away after 2 weeks, or like some of the stuff in Ukraine, it just looks like a complete circus. So I'd be curious to hear how you think that plays out over the next couple of years, and if there's anything that might change if we do get a new administration.
Well, things like the floating dock that we, threw a few $100 million at that then floated away, that just makes people like just shake their heads. What are you doing? And, whenever we send another 100 billion to, another country, a guy like John Bolton must think that's great. And of course, most of the pundits do too. They love war. And of course, the Democratic Party now has become even more, neocon than the Republicans. But your average person is like, have you seen my neighborhood? I mean, look at a lot of the major cities, and you can find videos all over. People just ride their bikes or drive a car and film for a couple miles, and it looks like Calcutta. And that's in America, and we're sending money overseas. It's insane. And it irks people. Americans, we should care about Americans first, and we don't. Both parties, they don't. We have several states in Europe and Asia that, I didn't know they were part of the 50 states, um, it's a huge problem. Foreign policy, the neocons have done more damage to this country than the Russians could do to us, other than nukes. It's beyond belief what these they're evil. They're demonic. I mean, war. We killed millions of people. You got Madeleine Albright, who's a feminist icon. And she's in the 90s. This is before the second Iraq war. She's saying, yeah, we killed 500,000 kids. It was worth it in Iraq. And she didn't even debate it. She didn't even say, no, that's fake news. It's not. No. She says, yeah, it was worth it. With Leslie Stone, 60 Minutes.
Basically, cost of doing business is the way they look at it.
Back when 60 Minutes wasn't working for the state. But I don't know, man. I'm so tired of these neocons and the Max Boots and the Bill Cristols and the David Frums and all these guys. They were all around. I remember them. I'm older than people. Someone told me the other day, yesterday, the government never had anything to do with corporations buying up all these single family houses. And I almost choked. I'm like, you don't remember. I mean, it's 15 years or it's less. It's 12 years ago now or something. And they don't remember. Nobody remembers last year, much less what happened in 08 or much less 2000 or much less in 1968. It's very discouraging sometimes because there's no sense of history in this country. And I wrote years ago, just forget economics and just study, history. And maybe psychology, and you'll be fine, and economic. Someone said, what's her name? Kamala has an econ degree. And my reply was like, having an econ degree nowadays generally means that you're an idiot, frankly, because if you look at the prominent econ degrees, and I don't mean to insult all econ majors, I'm sorry, but I have fun with the econ majors because they've done the ones in charge, the ones who get Nobel Prizes and the ones who get the Adam Smith Awards, like if you can believe it, Janet Yellen and Paul Krugman. They've done immeasurable damage to this country. It's just immeasurable, and as have the Dick Cheneys and the Mike Pompeos and all the rest of them, and the Hillary Clintons. So it's sad to see. I've become more over the years. That's one major change for me is I've become very anti-war. I'm not a pacifist, but I'm one of the most. You want to go to war? Okay, send your kids. For what? For what? What did we get out of Afghanistan after 20 years? We gave it back to the Taliban. Okay, great. What did we get for killing several million people in the Mideast, in 03 and in the 90s? All we did was create ISIS and terrorists and people who hate us. And
send some oil to Israel, but other than that,
I mean, Israel's not a U.S. state. Ukraine is not a U.S. state. I'm sorry, we have problems in Chicago and Los Angeles and Miami. Let's fix that. That's my attitude. And I think that's the attitude of 90% of Americans. But it is not the attitude of our leadership, which is, of course, this century. Another big problem has been extremely controlled by the globalists. Which are people who want a one world government. I mean, they just, they admit it. People say, oh, you can't, that sounds crazy, but look at their actions. I mean, look at 100%.
Yeah. It's, I don't think it's that hard to connect the dots, but maybe it's just because like once I started going back and look at some of this stuff, it's basically been my entire life. And so
your entire life.
One of the things where you look at the disconnect where like, if you start talking to older generations about some of the stuff, for most of them, like they think for the most part things are fine, like it'll all go back to normal eventually, but like I kind of look at it as like the slippery slope in a lot of ways, whether it's culture, financial, geopolitical, has been a one-way ride. So it's
we our foreign policy, we need to go back to the George Washington ideals or even the Dwight Eisenhower. We need to treat other countries with respect. We need to understand that other countries have different interests than us. We are not Rome. I know some people want us to be. I think this idea of American empire is a disaster for this country. We could have our military is spread so thin that I don't know how effective it is. We couldn't beat the Taliban. We
can't clean up the Red Sea right now.
The Houthis are kicking our ass. Well, you know what? We supported Saudi Arabia. We armed them while they bombed the Houthis for a decade. So there's a reason the Houthis don't like us, just like there's a reason the Iranians don't like us, and the Saudis clearly act like they don't like us. But um, we need to change our foreign policy from, hey, we're the big bully on the block. I mean, why would you constantly pick a fight with Russia and China, which they've done not just since 2022, but I have posts from 2014 talking about why are we kicking sand in Russia's face? Well, 2012, why are we doing this? Why are we so? I mean, we've been hell bent on going to war with Iran since this, for 40 years. I mean, I don't know. It wasn't Iran flying planes into U.S. office buildings.
No, but haven't you heard Iran's been 2 weeks away from nukes for about 30
Yeah,
years?
That's my joke. For every two weeks, they've been 2 weeks away for yeah. Well, and maybe we overthrew their democratically elected president in 1953, and maybe that led to some bad things that happened. Unintended consequences is the story of American foreign and monetary policy. Unintended consequences. Although, when they keep happening over and over, you have to wonder if they're intentional. Because if their intention was to create a group of billionaires, it's been a success. But if the intention was to destroy the American middle class and really hurt our morale and our society, that it's been a success.
Yeah, I think it's interesting because there's some things about like the fourth turning in some of the books that Neil Howe has written and some of the stuff that he said that I find problematic. But in general, I think history is cyclical, and I think we're kind of going through that phase now where I wouldn't be surprised if some of this stuff escalates in the Middle East or Eastern Europe. Like, I've seen different things that people are talking about, like U.S. mercenaries being on Russian soil with a recent invasion there. And it's just like, or what are we doing at this point? There's no one in the driver's seat to like pump the brakes and say, look, this is like enough's enough. Like Ukraine is like, I think, a lost cause at this point, but I don't see anyone willing to take a step back and realize like we should be looking for peace in Ukraine. Like it's over. So
100%. And we had a shot, and then Boris Johnson was sent to nix the peace plan. Biden right now, for 2 weeks, has been sitting on a beach somewhere. Kamala's running for president. Who's a button away from getting us into World War III? I mean, is it Blinken? Is it Hillary? Is it Obama? I don't know, but it ain't Biden and it ain't Harris. And people are so flippant about nuclear war. I mean, there's prominent people that have said things like, "Oh, let's just drop a bomb on Moscow and end it," and it's like, "Oh my God, you have no."
Lindsey Graham takes on Iran.
That guy. Don't get me started on that guy.
I think we should send him over there first, and then yeah.
Or send Dick Cheney with a shotgun over there and a beer.
Yeah. So, I mean, I could go on shooting the shit for you for hours, but wanted to wrap up here a little bit with the traditional closing question I came up with, and that is, what book do you think I should add to my reading list? Can be history, investments, finance, anything you think I'd be interested in.
Oh, I wish I would have thought of this beforehand. Well, I just recommended it today to Dave Collum. There's a book called Deterring Democracy by Noam Chomsky, which is written, I believe, around 92, around the first Gulf War. And if you want to have an interesting view of U.S. foreign policy from 30 years ago, that was significant in my view, shaping my views, you could read that book, Deterring Democracy. Now, as I always have to say, people say, "No, Chomsky, what?" I'm endorsing that book. Not everything Norm has ever written or said or done. Okay, so just keep that in mind. People have a real problem with that. I'll quote Elizabeth Warren. I'll quote. I got mad. I got someone blocked me. A prominent journalist blocked me because I was quoting Thomas Jefferson because he owned slaves. Well, yeah, but that's not the point. I'm not quoting him saying, "Hey, slaves are great." I'm quoting him on something else. So people are just they're wound too tight nowadays. You need to chill out a bit.
Yeah, I think that's a good message. There's lots of stuff going on, but there's certain times where it's good to take a step back and kind of take a breath, let things.
Worry about your family, your friends, your health, because you can't do bottom up. Try and fix things bottom up.
Yeah.
There is a guy I would recommend people look for and read. He's on Substack, and his name is Chris Arnade, Arnade. And what he does is he goes around and he's been doing this for years and just talks to average people. And it's so different than what you're going to get on business, Bloomberg or CNBC, and it's the
CMBS.
real
Yeah.
America. Yeah, it's real America.
Yeah. I'll have to go check both those out. But I appreciate you taking the time. I'd love to have you back on maybe post election to see how the circus has played out over the next 3-4 months. But
Yeah.
appreciate you taking the time. So with that, I think we'll be wrapping up. Thanks for stopping by. We'll see you next time.